Imagine a man walking into a building. It smells faintly of dust and nettle. He doesn't carry a bag of gold or silver, just a small piece of paper. With this paper, he can buy land, pay soldiers, or settle a debt that once would have required a chest full of coins. No magic words are spoken. No gods are invoked. Yet everyone in the room accepts this paper as if it were wealth itself. This quiet, almost boring moment is one of the most radical turning points in human history. Because the moment we agreed that a receipt could be money, everything changed. For most of our story, money was heavy. It clinked, it scratched. It had weight, a smell, and it carried risk. Gold had to be mined from the earth, silver hammered into shape, copper counted carefully. Armies moved slowly because their treasure moved slowly. Trade routes existed not just to exchange goods, but to protect precious metal from thieves. Kings built massive fortresses not just for defense, but to store their coins. And then, almost by accident, we invented a way to make money lighter than air. Welcome to Behind the Money. We're here to decode the financial world, revealing the stories, the systems, and the power plays that define our modern era. If you've ever wondered about the real story behind wealth and influence, you're in the right place. Subscribe now, and let's uncover these secrets together. You'll never look at money the same way again. The very first banks didn't start as grand institutions with marble columns and solemn logos. They began as tables. Literally, the word bank comes from the Italian word banca, which means bench. In medieval marketplaces, money changers sat on these benches, swapping foreign coins for local ones, weighing the metal and testing its purity. They were practical people solving a very practical problem. Trade had gone global, but money was still stubbornly local. If you were a merchant traveling from Florence to Bruges, you might be carrying half a dozen different currencies, each with its own value and level of trust. You were also carrying a giant target on your back. So merchants started doing something clever. Instead of hauling their wealth across dangerous roads, they deposited with a trusted money changer in their home city. In return, they received a written note, a receipt that said, in essence, "We owe you this much gold." It was a placeholder. You'd travel to another city, find a partner of your money changer, present the note, and withdraw your coins. It was simple, safe, and honestly a bit boring. But then, someone realized you didn't actually need to withdraw the coins at all. Instead of counting out a pile of silver coins, he just slides a receipt from a reputable bank across the table. The other merchant pauses. He knows the bank. He trusts it. That single moment when trust officially replaces metal is the birth of receipt-based money. And here's the craziest part. Nobody planned this revolution. There was no grand declaration, no new law, no philosophical manifesto. It just happened because it was convenient. It reduced risk. It saved time. It happened because we humans are astonishingly good at agreeing to fictions that make our lives easier. Once these receipts began circulating, the bankers noticed something fascinating. Most of the gold and silver just sat there, day after day, year after year. So the bankers started asking a dangerous question. What if we lent some of it out? This is the point where banking stops being a simple storage service and becomes something far more powerful and controversial. The receipts for the gold still circulated as if they were fully backed by metal, even though the metal itself was now partially somewhere else. This system, known as fractional reserve banking, worked beautifully right up until it didn't. Every banking panic in history starts in the exact same way, a whisper, a rumor. What if the bank doesn't actually have all the money? One nervous depositor rushes in to withdraw their funds. Others see it happen. Fear spreads faster than reason. Soon everyone wants their metal back, all at the same time. And no bank, no matter how rich, can survive that. Yet societies kept choosing this risky system anyway. Why? because despite its dangers, receipt-based money unlocked economic possibilities that heavy metal never could. During the Tang and Song dynasties, trade exploded across vast distances. The sheer volume of copper coins became so immense and heavy that merchants complained it was easier to transport bricks than cash. So Chinese merchants began using paper deposit notes claims on coin stored somewhere else. The government saw this, and then it copied the idea. China became the first civilization to issue state-backed paper money on a massive scale. It was revolutionary, and it was also terrifying. For the first time, money wasn't directly tied to a physical substance. Its value rested entirely on trust in an institution, and that trust proved to be fragile. Overprinting led to rampant inflation. Dynasties fell. Paper money quickly gained a reputation for being both brilliant and incredibly dangerous. Europe watched this from afar, cautiously intrigued. Back in medieval Europe, banks like the famous Medici family in Florence didn't just hold money, they moved it invisibly across borders. A Florentine merchant could pay a supplier in London without a single coin ever crossing the English Channel. It was all done with ink and promises. These promises fueled trade, financed wars, and quietly shifted power away from kings and toward the financiers. Rulers who once measured their wealth in treasure chests now found themselves dependent on lines of credit. And here's the uncomfortable truth. Receipts as money created incredible wealth. By the time governments finally stepped in to regulate banks, the genie was already out of the bottle. Money had become abstract. Trust had become the ultimate currency. Today, when you swipe a card, tap your phone, or send a digital payment, you're not actually moving money in the old sense. You're just updating records. You're exchanging modern-day receipts, direct descendants of those first handwritten notes from medieval marketplaces. No gold changes hands. No vaults swing open. There's just trust, encoded in complex systems that we rarely ever see. The birth of banks and receipt-based money didn't just change how we trade. Because once wealth became an idea instead of a physical object, the world could grow faster than the supply of metal ever allowed. If you found this interesting, consider subscribing for more stories about how our world came to be.